First quarter gross domestic product results for 2024 are in, and they represent a bit of a puzzle. What do I mean? Now, the economy grew at 2.98%, exceeding the same period last year, but falling short of 3.46% growth achieved in quarter four 2023. Now, this is particularly interesting considering the positive Purchasing Managers Index reading. So to help us understand this better, and of course, we look at all the numbers, I'm being joined by Abiodun Kayode, who is the Senior Manager, Tax and Regulatory Services, PwC Nigeria. Thank you so much, Abiodun, for joining us on Business Edge once again.
Thank you for having me, Lekon. Glad to be on your program.
Good. Now, the headline PMI for February and March last year contracted as a result of the Naira redesign policy of the Central Bank of Nigeria. But with its expansion in 2024, analysts expected faster growth. So with the GDP printing 2.98% in quarter one 2024, would you consider the achievements modest or below par?
Okay, thanks. One thing we must first of all try to ensure is to explain how we calculate that growth. So basically the growth is simply you comparing the performance in terms of gross domestic product, that is the total market activities carried out in Nigeria. We are comparing between two periods. So in this instance, it's going to be the first quarter of 2024 being compared with the first quarter of 2023. And like you said in your introduction, 2023 wasn't too good due to the Naira redesign policy that kind of stalled economic activities in 2023. So yes, we were expecting that growth in 2024 based on the comparison, and like you said, it's lower than what we had in the fourth quarter of 2023. What is my own view of this? I think I would look at it in terms of Nigeria's potential. I think we could actually do more because if you consider where we are at the moment and our aspirations for the future, Nigeria should actually be doing more if our policies are right. So I don't think the 2.98% is something to be happy about, especially when you compare us with relative countries in different continents. So if I pick Indonesia, for instance, our population is not so far from each other, but yet their own growth in terms of their GDP is around 1.7 trillion, which is way higher than where we are currently, around $290 billion. So I think there is a lot more that needs to be done. We need to grow even more. So that's my own verdict of the growth figure that you currently saw. I think we can do more than that, not something to be impressed about.
Okay, so talking about doing more, we get to look at the factors. Of course, when we look at comparing 2023 to 2024, we discover that, as you have said, the GDP growth wasn't quite encouraging, it wasn't quite interesting. But at the end of quarter four 2023, we saw an appreciable growth of about 3.46%. The only thing is that that trend couldn't continue in the first quarter of 2024. So what are the factors that you would say are actually slowing down the growth rates?
Okay, so one thing I must quickly say is that the first quarter of every year, it's understandable that there is going to be an appreciable growth. And the reason for that is because if you consider the first quarter, that was where we had lots of festive periods. I mean, a lot of buying and selling, preparation, people traveling, and even those who are most of our folks in the diaspora are coming into the country, probably because it's cold over there, coming into the country, coming to see home and spending time with family. So you would expect a lot of activity. So you can understand why sectors like transportation sector were growing and booming, and why activities generally were actually growing in the fourth quarter of 2023. But when you begin the year, people begin to return, people begin to go back to work, and they begin to plan in anticipation for the future. Spending is not that quite much in the first quarter of the year. So one other thing that you can also think about based on this report, if you remember the first quarter of this year, we even had, or towards the end of last year, we had issues with power, right? We take, for instance, the Egbin gas power plant having issues right there. And most of these things translated into the amount of power that most individuals and businesses got in the first quarter of the year, which if you even delve deeper, you would see that the power sector actually contracted, right, in a long period of time. So I think these are the reasons why we can expect that growth actually went down on a quarter-on-quarter basis. So it's something that is expected. If you look at even previous years, you'll see that Q4 has actually been doing well, and Q1 will typically start slow. So that's pretty much the reason.
Well, we're looking at 3%. We're talking about 2%, 3% thereabout. But then some analysts say that a GDP growth rate that is not between 8 and 10% isn't ideal for an economy and a country like Nigeria, considering its population and every other sectoral performance. Now, do you share these sentiments? Because earlier on you said that there's a potential for growth, but it doesn't seem as though Nigeria could be hitting the peak. So do you share the same sentiment, and what do you think can be done in terms of dynamics to change the narrative?
Yeah, I do, Lekon, and I think it's that's the reason. The reasons are very clear. So basically, if you consider the mere fact that Nigeria is regarded as a country that is full of potentials in terms of human resources and also in terms of natural resources, we actually have these in abundance, right? And typically, Nigeria's population growth rate is considered to be somewhere within the range of 3%. So if our population growth rate is somewhere within the range of 3%, then the expectation is that the activities that are being carried out in the country should go higher. Otherwise, you will begin to see some negative consequences, right? So Nigeria as a country, which has this large amount of vast resources, which I've spoken about previously, we should be doing way within that range of 8 to 10%, right? Given the mere fact that if you look at similar economies, even within Africa, so Rwanda, for instance, Rwanda has a population of 14 million. Rwanda's growth rate for the past 3 or 4 years has been averaging within the range of 7%. And what exactly is Rwanda's resources? Rwanda doesn't have natural resources as we do. They employ more of tourism as well as export of agricultural commodities like teas, right? Even in East Africa, Kenya, like flowers, right? And these are economies that are growing way faster than Nigeria, despite the fact that we have crude oil, right? And oil is actually selling at a very high price in the international market. So there is a lot that we need to do in order to push our growth. And Indonesia, which I made reference to earlier, Indonesia is an economy that they also have natural resources similar to Nigeria, even though we have oil, right? But yet, with economic policies and with the right people in the right places, they are able to grow the economy. They are able to expand on consumption, right? Consumption, which has actually promoted their growth. So Nigeria should also be doing similar, especially given the fact that the current administration is looking to hit $1 trillion economy by 2030. So I think Nigeria actually should do this. Given the mere fact that even at the international scene, we have a lot of recognition in terms of most of our ambassadors, either in the entertainment industry, we are well known, right? The talent is in no doubt. I do think that Nigeria needs to put in place certain policies and put in place basic amenities and infrastructure that can actually promote our growth. Like you said in your introduction, we have the service sector actually being a driver of this growth that we are seeing. But I do think that if we have things in place, right, infrastructure in place, policies in place, we should see an expansive growth more than what we are seeing currently. What I see at the moment is something that is good, but I think we can do better.
So now that you have mentioned the issue around policy in terms of its make and implementation, what role do you think the CBN's tightening policy played in the current GDP figure?
Yeah, and that's a very good and interesting question that you've asked, Lincoln. So generally, like you said, the CBN has been tightening the monetary policy rate. And typically when monetary authorities use this instrument of raising interest rates, what they are primarily trying to do is to steady inflation, basically, right? To ensure that price is stable. That's what they primarily do with that instrument. And what that simply does is that you are actually trying to encourage savings, right? You're actually trying to encourage investment. What the CBN is trying to do with this policy is to attract foreign portfolio investors into the country and stabilize the naira, which is our currency at the moment, which has been actually going through ups and downs, right? But then raising the interest rates, even though you are trying to control inflation, is also anti-growth, right? So we know that the CBN is in a mix of whether to pursue growth or whether to try and control or stabilize the money supply in the economy, right? So what the CBN is actually doing with this policy is that it's actually anti-growth in the sense that you don't see a situation whereby people are now able to spend, people are now able to consume. Because if you consider the cost of borrowing. Borrowing costs are now on the increase. Any businessman or any investor who wants to borrow in order to stimulate growth or engage into productive activities would not be able to do so because its costs have increased. And what this could even do in the long run is, given the high state of things, the high cost of things, what this could actually do in the long run is, by the time businesses now begin to look at their cost, they might want to offset one cost against the other. And this could actually lead to probably laying off of staff members, right? And this could lead to an increase in unemployment. If not increase in unemployment, might actually cause a decline in productivity, whereby you find people engaging in activities that are not too I would say that are not giving out in terms of productivity is low in such activities, right? So this could actually have a negative impact. But then again, the CBN is actually in a tight spot. So I won't put the blame totally on the CBN. They are doing the best they can from the monetary standpoint.
Okay, so you actually mentioned a couple of challenges that businesses will be facing, and this will speak more to the services sector in terms of their mode of operation. But notwithstanding, we see the services sector set to be driving much of the growth with a 4.32% expansion and an overall contribution of about 58.04% to the aggregate GDP. So if we continue to have these challenges and we still have still a resilient services sector, do you think there are areas that expansionary measures can come into play and can further help the services sector stay strong despite all these challenges to continue to contribute more to GDP growth?
Yeah, I do. I do think so, right? Because like you rightly said, the service sector has been a major driver. And if you drill down further, you would see that it's even the financial service sector that has actually been a major driver of these policies, right? Because the financial services has actually done well. Would I say due to luck? The impact of the flotation of the naira, or the impact of the removal of that control, would actually help them in terms of the amount they are recognizing based on their foreign denominated currencies that they have in their books. So also the increase in the interest rates would also help them in terms of interest income. So the financial service sector has been the major driver of the growth that we've seen in the services sector, right? But like you said, expansionary policies, and I won't look at it solely from the point of view of the monetary angle, right? I would look at it from also the point of view of the fiscal angle. So take, for instance, services will thrive well when there is adequate infrastructure. Look at developed economies. Look at economies in the East, right? Even in Africa. Look at economies like Rwanda. They have basic power supply, right? Basic amenities. It's there, right? The roads are good. I was there last week. You could hardly see a pothole while you are moving on that road, right? And there was constant power supply. Over here, the services sector, you find most of those who are providing the services, right from the barber on the streets, right, to even the financial services sector we're talking about, they incur significant cost because they have to rely on alternative sources of power, diesel, right? Look at electricity. Look at electricity in this report. This Q3 report, this was negative 5.4%, right? So I think if we can tackle most of these issues in terms of infrastructure, you can help expand their production. So that's my take with respect to expanding and helping the service sector, Liko.
Okay, well, big, of course, decision that the Nigerian government would have to make in order to drive growth in all the sectors of the economy, which will in turn push the GDP growth rate and probably put it in a better stead. We hope that they will be able to take that initiative. Abiodun Kayode Ali, Senior Manager, Tax and Regulatory Services, PwC Nigeria, thank you so much for your contribution on the show.
Yeah, thank you.